So, I think that's an example. But another time, I think this was in 2002 or 2003. I had read somewhere a long time ago, probably in the 90s, that the failure rate, there was an article about the failure rate of different businesses in different SIC codes. SIC code is what we use in the US for different industry classifications. So there was this article about failure rate of businesses by SIC code. And I noticed in that article that the lowest rate of failure of any type of business was funeral homes. So funeral homes basically pretty much never went out of business. And I found it really interesting. And I thought about it for a while. I think the reason funeral homes don't go out of business is multiple reasons. Number one, when all of you graduate, not one of you is going to say, I want to be the king of funeral services, or I want to join a funeral services operation. It's a morbid industry. Young people aren't looking to go down that path. So first of all, there are not a lot of entrants looking. Whereas, if you look at something like Bitcoin, everyone and their brother wants to create something, a clone of Bitcoin, right? And be the first guy and have a bunch of them at 1 cent or whatever. But no one does that in funeral services. So you don't have a lot of intense pressure for people wanting to go into that business, which is not the same with airlines, right? Everyone wants to start airlines because they think it's fun and flashy. The second is that when we're looking for a place to do the last rites of our beloved uncle or aunt or father or mother or whatever, we're not going to take the low bid. So we're not going to call 6 places and compare prices. Okay. We're going to probably look at a place that the family has worked with in the past, where there may be some history, and then go down that path. And we're not really going to be focused on price and such, because it's a morbid time, etc. And so it's not a business that faces intense pricing pressure. They can price however they want. They could even, overprice it, if you will, and you may not even understand whether you were ripped off or not, because you don't have a benchmark. What should a funeral cost? How do I know? I deal with one every 40 years or something. So basically, it doesn't face those type of pressures. And the other is that the brand and the traditions, the places that have been there for a while, they tend to have a following and such. So I just noted that it's interesting that, funeral homes have a very low failure rate. Then I think in 2002, when I was running my fund, one of the things I do is I have a subscription to Value Line. I look at Value Line every week. And one of the things, in their summary document, they have one of their lists is out of the 1,700 companies that they follow, that maybe the 50 companies with the lowest PEs. Then they have another 50 companies with the highest PEs. So they just give you a list. And I always look at the low PE list. And usually you'll find some companies, PE of 2, PE of 3. And those are like real dogs. Like you should just avoid them like the plague. Usually what that means is if something's trading for 2 times earnings, is basically that's in the past, there's no more earnings left. That engine has run out of juice. Okay. But I noticed in 2002 that there were 2 funeral services companies sitting amongst the lowest PEs. They were sitting both of them, one was sitting at a PE of 2 and the other was sitting at a PE of 2.3. So I said, it cannot be that these companies can't make money. If anyone can make money, they can make money. I mean, I don't know who all are going to die in Singapore in 2022, but I can tell you how many are going to die. Okay, so you can come up with that number with a lot of precision. And so there is a recurrence in the sense that humans are going to die and certain percentage of the population is going to die and the revenue is going to show up and all of that. So I said, this is really strange. Why would a funeral services company trade at 2 times earnings, right? I mean, they should be at 20, 30 times earnings because they're just so stable. Even if they have no growth, they're so stable. In a low interest rate environment, it should be at least 10 times earnings, right? At that time, interest rates weren't so low. So I decided to dig in, right? So one of the things I just want to tell you is that the reason I'm giving you this data is to just say, what is the trigger? There needs to be a trigger to dive in, right? So there's 50,000 stocks. The data set is too large. We can't look at all 50,000 stocks. So we have to have a way of shortlisting. right? So one of the things I'm looking for shortlisting is I'm looking for anomalies, something weird that makes no sense. This was something weird that made no sense, right? So I said, let's dig in and find out what's going on. And when I dug in, what I found with these two companies, Stewart Enterprises and Service Corp, is they were very large, publicly traded funeral services operators, and they had been doing a roll up for more than 10 or 15 years, where they had been buying mom and pop funeral services, paying, 10, 8, 10, 12 times earnings. And then their own stocks were, worth a lot more. And they just kept doing that. And they had bought like thousands of funeral homes. And then what happened is they got too levered. Like in the case of Stewart Enterprises, they had bought a large number of funeral homes in Europe, but they were having trouble managing them. And so none of those funeral homes were producing any cash flow. So they had paid all this money out, but they were not making any money. And so they were kind of upside down, where the debt service was difficult. And I said, this sounds like a great business with a bad balance sheet, right? I mean, basically, the business is fine. It's the balance sheet that's stupid. And so I said, can they get out of it? What would happen here? I looked at the situation, and they were trading at 2 times earnings. Okay. So I said, look, all these people they bought these funeral homes from. Okay. And what Stewart Enterprises had done is, let's say they bought John Hardy Funeral Services, for example, in Kansas City, for example. They made no changes to the business. It was still called John Hardy because it had brand recognition. And the people who were the clients never realized the business had been sold. They still had the John Hardy family running it. And they try to keep everything the same, right? Because the value was in the longevity of that brand and that. So this was not one business like McDonald's with 1,000 locations. It was each individual place running with its own brand. Because if you kill that brand, you would really take away value and such. So I said, look, they bought John Hardy for maybe 10 or 15 times earnings. Okay. If they go back to John Hardy and say, listen, would you like the business back for 5 times earnings? And John Hardy would say, yes, because they know how good a business it is. So they would say, these dumbasses paid me 3 million and I can buy it back for 1 million. Here's your million. Goodbye. Right. So I felt like if they had to, kind of raise cash to take care of their bank debt, etc., because there were so many of these funeral homes, they could easily sell a few hundred relatively quickly. And they would raise enough cash to get their situation. So I said, I don't think this can go bankrupt. I think they've got many different levers, and they had some cash, and they had about 18 months of breathing room, and the markets don't like uncertainty. So they had punished the stock because of this. And then what happened in a few months is they actually did something better than I thought. They made a deal to sell all their European funeral homes. So the total cash flow those European funeral homes were generating was a big fat zero. Actually, it was negative. They were losing money. And they made about 400 or 500 million when they made that deal. So when they sold it off, an asset which was stranded suddenly gave them a bunch of cash, and the stock started moving. It doubled, then it doubled again. Eventually we moved on, but it was a very nice home run for us. And again, there it was just, something I had read a long time ago, which I understood about funeral homes. And then you have this other understanding, which is good business, bad balance sheet. Can you work with that? And then, kind of confluence of factors coming in, and that works out.